we continue to see improving housing policies for real estate investors who are willing to create new housing. And this latest one from the federal government announcing that they will waive the GST portion of new rental construction is a pretty big one. So in this video, let's break down the details of what this actually means. Stay tuned and keep watching. First up, let's talk about the big news. The federal government has announced that they will be waiving the GST portion, which is 5% on new rental builds. Now, this is fantastic news for anyone looking to invest in making multiplexes in Toronto, because this means that you will be saving 5% on the GST side. But let's backtrack and look at why they're doing this. Now, according to a CIBC study done in June of 2023, the numbers just don't make sense for developers right now. If a developer builds a condo, they can potentially make 12.5% in profits, but if they opted for a rental project, what they end up losing is usually 20%. So if the numbers just don't work out, purpose-built rentals are definitely being lagged behind. And now that interest rates are much higher than before, there's even less of a reason for developers to do this. And that's a big reason why rents have been skyrocketing so much lately, which is the issue that our government needs to address to keep housing affordable. So why don't rental numbers work? Well, there are a few reasons according to CIBC. The number one biggest reason are property taxes, but the chances that this will go away is very slim because our municipalities do need the money, and they're even trying to fight for more money these days. The second biggest reason are development charges, and we'll talk a little bit more about this later. And the third biggest one is HST, which eats up another 7% of the profit margin for developers. Now, it seems like the Trudeau government has finally recognized this issue, and that's why we are seeing them doing the waiving of the 5% of GST for new rental construction. Right now, this is only on the federal side, but it's up to the individual provinces to see if they will follow suit for the remaining part of the HST. And here in Ontario, we do have the incentives in place already, but you will have to pay for this upfront and then be rebated for a portion of it afterwards. Now, under the GST HST new residential rental property rebate, before the announcement, there was a bit of a rebate on the GST side of up to $6,300 on a $350,000 fair market value of build, and it goes to zero for fair market value of over $450,000. Now, this is the part that will be changing and being waived. On the Ontario side, the maximum rebate is currently $24,000 on a $400,000 fair market value, and that is 6% rebated on $400,000, and it taps out there. So if you do keep your total cost around $400,000, then you are looking to save around 11% after the new GST changes come into place. Now, I think the timing here is a little bit late, but definitely it'll still be helpful. Ever since interest rates have seen that steep rise up, we've seen a big drop in construction because it is getting much tougher to qualify for enough financing. And even if developers can secure financing, it still has been pretty tough to carry the cost during the construction phase, even if future rents can't justify it. And so this change is great, especially in Toronto when you combine it with other new housing policies like the ability to build 4 units in each house and the waiving of development charges for up to 4 units only in Toronto. So all of these combined definitely do improve the profit margin substantially. Now, once you create more units, the numbers can potentially work pretty well. Here's an example. You can buy a single family home for $1.15 million and then convert it into 3 units by spending an approximate $200,000 to get this done. And after you do this, you can get total rents of $8,300 from the 3 units combined, and that translates to a cash flow of over $1,700 a month afterwards. Now, you might be wondering about the specifics of these new GST rules. And as of right now, it is pretty restrictive. It only qualifies for houses with at least 4 units or a rooming house with at least 10 rooms, and 90% of the residential units need to be long-term rentals. But this could change, and if it ends up following what the existing HST rebate allows, then it can open it up to smaller multiplexes or garden suites and laneway suites too. If you're interested in learning more, but you don't know where to start or how to get something like this done, our team is here to help. We're a real estate sales brokerage that focuses on investing in freeholds in Toronto. So don't hesitate to take that first step by booking a Zoom discovery call with us. And if you found this video helpful, show us your support by giving us a thumbs up here for this video and hitting that subscribe button to stay updated with our content. Our channel covers a wide range of real estate investing topics in Toronto, from market trends to housing policies, interest rates, and investing strategies. We want to make your real estate investing journey easier, and so we offer services like planning, analysis, buying and selling, renovations, leasing, and even property management. For more information, visit our website or find us on social media. Thanks so much for watching, and I'll see you in the next video. Bye.